Welcome to the Justin Ng Show, where real entrepreneurs and investors reveal how they turn humble beginnings into high-impact ventures. From bold moves to capital raises, we unpack what it really takes to build and scale greatness. Let's go check it out. How do you go from door-to-door sales to leading private equity deals and a 1,600 plus unit real estate portfolio? Today, we break down the mindset, sales systems, and capital plays behind that journey. We'll walk through a real capital raise he closed using personal brand plus warm intros. Welcome back to the Justin Ng Show. I'm joined by Justin Freishtat, operator, capital raiser, and managing partner who's scaled strategies across funds, tech, and real estate. He's big on networking, personal development, and doing the work. Health, wealth, and mindset. Justin, welcome to the show. Thank you so much, Justin, to join me here on my podcast today. I truly appreciate your time. Thank you so much. Just to get started, it's like for me, what I usually ask people when I first start is like, how is your journey like from the beginning until to where you are right now as a capital raiser? Tell us a journey, like what trials and tribulation you had to go through to get to where you are right now.
Yeah. I mean, it's only been, I'm going to say 2.5 years, somewhere between 2 and 3 years that I've been doing this. So I think it was really just the habits and skills that were built in the first business that I had, and learning how to talk to people and doing door-to-door sales is how I got started. So did 10 years of that, and then started building teams around it, leveraging the skill set, teaching other people how to do it. And then we eventually exited that business. So it was like, all right, what am I going to do next? And I had seen enough of the world to know I wanted to be in that space. So just kind of networked my way into it, and then just hit the ground running, networking and raising capital for deals. Yeah.
Okay. And what were you doing before, like door-to-door sales? Like solar type sales?
Similar.
Okay.
Wasn't selling solar, but it was cutlery, cookware, water systems.
Oh, okay.
Grills, freezers, organic food programs that went along with that. So it was straight B2C to consumers. Sitting in kitchens like right over there, and I spent literally 10 years in other people's kitchens. That was my life. Yeah.
Okay. I remember I follow someone on podcast. I listened to him, and he used to be a Cutco. Yeah, it was like, so that's where I kind of like understand a little bit. But and then how was that transition like from stopping that business and then going to capital raising? Like how were you able to build that relationship, that muscle of yours to be able to gain a pipeline and get an understanding from the people that you're trying to raise capital for, or the deals that you have?
Social media. So I started building my brand before that. And I think that's a common misconception, is people want to wait until they have everything situated to start building their personal brand. And it's just, you don't even need a plan for your brand. Like, you are your brand. So whatever you're doing, I started pounding social media content. We did podcasts around organic food and farming, because that's the business we were in. And then pandemic hits, business blows up, we sell to a private equity firm, and overnight I have to reinvent my life. So I just pivoted the content, the profile to, be around investing and capital raising and DM outreach. That's how I did everything. Built every relationship I have is either from going to an in-person event, a mastermind, or reaching out to people from my Instagram. So when you're building a brand, I think that's one of the things people miss is, it's not that you want to build it for a specific product or purpose. It's your networking tool. You are the value of your profile. So built the following, focused on building the brand rather than what it was going to be used for, and then you can use it for anything. So then I just started DMing people that had podcasts in real estate, crypto, life insurance. I didn't really care, as long as wealthy people were listening to those shows. I wanted to be on there, and that's how I started raising money.
Gotcha. Okay, so were they already following you and then you DM them, or you just like cold DM, like what I did with you in LinkedIn?
Exactly. Cold DM.
Okay.
And we have a very specific system we use that we do for all of our clients in the marketing business as well, to use DM outreach to convert. And it is significantly cheaper than running ads.
Gotcha. Okay. And that's what I kind of like understood as well from my mentor, Jackson. He was telling me how he's trying to like train people to think it differently. Where you have some reels, and then you post them, and then from that you try to market with it. It has like a high traction from it. Mm-hmm. And is that kind of like similar to what you guys were doing as well?
Yeah, I think the content is less important than people think in terms of reaching your core audience. You know,
Right.
if you have a reel that blows up and you get 1 million views, that's cool. But if you're, let's say, like in my case, I'm looking for accredited investors that have 100,000 or more to deploy in a deal, what percentage of that million views is going to be my target? It's very small, right? And that's the case for most niche entrepreneurs that are on social media. So if you're not a full-time creator and it's not 100% of what you do, you're competing against the best creators in the algorithm, right? So you should be less concerned with how you reach people with your organic content. You should just put great content up there, have the page look really nice, and then you go target it into the DMs, go follow the people that you want to follow you back, right? Be interested in them before seeking to be interesting. You do that, right? So I'm never going to send somebody a cold DM unless I follow them first. We go to their page, we like and comment on some of their content, love their stories, just completely support them, and then we hit their inbox with a DM.
Gotcha. So you guys have a strategic that you go through that. And how did you develop that skill? How did you know how to strategically do that in the beginning?
Testing, trial and error. So I built the SOP based off of testing it myself, right?
Okay.
Trying different words, different copy. And now we have data that says this is the best way to do a first DM. And then we know, okay, when they respond to that first DM, the next thing you should do is send a selfie video, right? So do things that no one else is doing, because social media is such a dirty landscape. Everybody assumes that you're trying to sell them something or you're scamming them, right? So you have to be social with them, show your face, send a voice note at the very least, like let them know you're a real person, you know, because everybody's skeptical up front, as they should be.
Mm-hmm. Okay. And so how long was that you had to go through the testing, all the like the test copy, and you have were you doing it yourself first, bootstrapping yourself, and
Yeah,
then
I do everything myself to figure out what works, and then build that SOP, and then you hire managers or VAs to execute that strategy for you.
okay, and that's the and then now you have the winning formula, and you just keep rinse and repeat.
Yep.
And is it only on Instagram or other platforms as well?
We focus on Instagram.
Instagram, okay.
Yeah.
And that's where most of your are you getting any inbound type of people that want to raise? I mean, when you're raising capital, do you get any inbound for your deals as well?
A ton, yeah.
Okay.
That's how you flip the script, right? You build a big brand, you go on a bunch of podcasts, and people that are in the market for whatever your deal or product is, they will inbound you, right? So that's how I raised the first 10 million strictly off that strategy.
Wow.
And going into rooms, right? And when you meet people, hey, what's your Instagram? I go follow them, then they follow you back, and now they're in your stories, they're in your content, so you stay front of mind with people. That's more important than anything. If you get a business card or their contact, you're gonna forget about each other in a couple of days. So
Okay.
I need. It's almost like the way it used to be in sales before social media. The people who won, they say fortunes in the follow up, right? So whoever's dialing, and then that person's finally in the market at the right time that you contact them and you get a conversion. Now you can just put them in your social media, stay front of mind, keep creating, right? They're watching, and then it's the right time, and boom, they inbound you, and now you've got a lead. You move them to Zoom, and then see what you can do together.
Okay, and that's how you guys were able to raise your first 10 million.
Yeah, all from retail.
Okay, and that was what do you mean by retail?
So retail investors, so accredited investors, whether it's an entrepreneur, a doctor, a lawyer. So when you look at the different levels of who you can get capital from, you've got retail people that are accredited investors. Then you have your qualified purchasers, people with 5 million or more, and then you're getting into family office territory, and then institutional capital at the top. So lots of ways to raise money. It's just knowing what kind of deals are good to pair at each level, and then what is the check size. Because when you get to those higher levels, some of these firms won't even look at a deal unless there's 25 million or more to deploy, just because writing a check smaller than that's just not worth it for the size of their firm.
Gotcha. Okay. And do you have specific marketing to target these different levels, like retail, family offices, institutional lenders?
Mm-hmm.
And what's the marketing that you guys use for this aspect?
Yeah, at the higher levels, it's mostly networking. Going to really high end events that are tough to get into, where you got to either apply or qualify or you make a donation.
Okay.
To get in those rooms, and you're just shaking hands, right? Building relationships, not really talking about deals or anything like that, because at that level, nobody really needs money. It's more about the relationships, and if it's fun to do business with, and are the synergies there. So you get to kind of be picky about who and what you'll work on once you're at that level.
Okay. Gotcha.
Very,
So
very different than going into cold DMs to just, hit doctors, lawyers, people that, investing's not their thing, but they have money for it and they want to invest in private placement.
okay, and so how do you target those so doctors, dentists, lawyers, those are you consider retail investors.
Yeah.
So how do you specifically target them in terms of like since they don't have that kind of knowledge, how do you educate them and how do you try to be able to get them to be um, investors in your opportunities?
Yeah, so if I was doing it from social media, and that would be going very targeted, right? Which I normally don't do that for capital raising. I'll do it for the marketing business. But I would be looking at, okay, where are the, most expensive country clubs in the country? Let's go see who's tagging themselves there, who's using those hashtags. And you can find those accounts where, if somebody's dropping 50 to 100 grand a year on a membership to a golf club, that's someone who can invest privately, right? So that's the
Gotcha.
way you would want to think about it. And then you just start introducing yourself, sending non-threatening DMs. You never sell anything in the first DM. You're just building a relationship, and then you see how it manifests from there.
Okay. And then you already have a try and true DMs to send to these people.
Mm-hmm.
If you can share like what specific words do you put in there, like what kind of like keywords do you put there to be able to try to pick some interest?
Yeah, so it totally depends on what it is. Like we've got roofing companies, we've got dog
Ah,
trainers, we've got golf instructors, and then we've got people that are selling services. So we would look at, okay, who is your target avatar? We got to figure that out first. Like who are we looking to target, and then how can we empathize with that person and what their pain point is in that first DM. So for me, if it was the marketing thing, I would say something like, hey, just came across your page, gave you a follow, let them know I already followed you, I'm interested in you, right? That's one of the first things you want to say. And then I would say something like, hey, it really kills me to see somebody like you creating such amazing content that looks like it just gets stuck in the algorithm, right? And then
like what you're
they're like,
talking about.
oh, he understands, right? Because if somebody, here's my avatar for the marketing. You're paying for a blue check, you have less than 10,000 followers, you're creating content, you have low engagement, you obviously are trying to build a brand and it's not working. And then you get a DM from an account like mine that's empathizing with the problem that I know you have. It's a great way to start a conversation.
Correct. Okay. And so because you're providing a solution and see how.
I'm not even providing a solution
Oh,
yet.
okay.
I'm just saying, hey, I understand what you're going through. Let's talk about it.
Okay. And then from there you build that relationship that and then take it from there, basically.
Yeah, and then we figured out through testing, if you want to sell something right in the DMs, I've found that a $500 price point or less for that first offer, you can convert without even getting on Zoom, without even getting on the phone. When it goes over that, there's a lot of resistance. But the right person I have found for marketing stuff will just click and order a $500 or less product. So that's what I lead with, but giving them the option of, hey, if you want to look at going bigger and really taking your brand seriously, let's hop on a Zoom. So they're either going to click and order the $500 a month product, or we're going to get on Zoom and we can talk about higher ticket packages. That's kind of how I have it set up.
Oh, okay, okay. So you guys like have so it starts at 500, but there's something else for if they want to go further, they'll be able to get more from that after that $500.
Right.
Okay,
So it's the kind of thing where I can a la carte these packages together, bundle them up. So I'm going for the engagement and content distribution on that first DM outreach because I know it's a very easy problem I can solve for them at $500 a month. Then it's okay. Do you want us to handle your editing? Do you want to go into these celebrity growth campaigns and grow your account? Do you want to do publication and press? We can get
wow,
you
okay,
public. Like we do all things marketing, and we also run ads too. So it's once you've built that up, it's like, okay, now do you want to run ads on top of the organic strategies and really maximize? So it's I just found it's get the relationship started wherever somebody is willing to get started,
okay,
and then you prove results, scale them up from there.
okay. So how do you tie that into the capital raising to be able to get them to be? I know you try to build your business up, but do you tie that into giving the opportunity to be able to raise capital from them as well?
Yeah, I mean that's a great pipeline. If I can help somebody grow their business in the marketing side and they start making more money, they see the other things we're doing. Yeah, a lot of people that were clients of mine in previous businesses or the marketing business end up being investors in our projects too.
Gotcha. Okay. And when it comes to capital raising, what are you mainly focused on in terms of like the product or the deals that you have? Is it mostly like multifamily, real estate, or other things as well?
Yeah, all kinds of stuff. So we started with, it's usually not necessarily, let's say, a category of investment. It's just, where is the competitive advantage? If I can find great deals or great opportunities with a competitive advantage, that's the only thing I will invest in. So in other words, we're not buying anything retail. So let's say, I've got a fund-to-fund relationship with Innovation X. It's one of the biggest private equities that a retail investor will ever get access to. So we had the opportunity to raise capital for SpaceX, Flexport, companies like that.
Mm-hmm.
And that's through a fund-to-fund access. So Innovation X sits on the cap table of these companies. We go fund-to-fund with them, right? So if they have $100 million on the cap table of a company, a retail investor that has $100,000 to deploy will never have a chance at that investment unless they go through a fund like us, where we raise retail capital, bundle that up together, and then go make the investment with that fund.
Understood.
So in a way, we're either selling access because there's no other way to get into it, or it could be a discounted arbitrage. Like if we can get, we got those Flexport shares at $7 a share off a fund that was in distress, and that was after Andreessen Horowitz and SoftBank put $1 billion each in at like $7 or at $14. So we're buying those shares privately at a 50% discount to, the previous raise round. So that's what you're kind of looking at, is a competitive advantage. Anybody can offer a piece of real estate or whatever, but can you offer it at 50% off of the market value, right? Because the money's usually made in investing when the transaction is done. And if you're betting on appreciation or growth, that's always a risky game.
Okay. And how does that go from like half to get 50% from the initial raise? Is it kind of like different series of investing strategies at that time?
Yeah, that in the late stage private equity, I would kind of call it wholesaling private shares, just like a piece of real estate. That's the model most people would be familiar with, is wholesaling real estate, right? If I got a house that's worth $1 million, but I have a way to get it at $500,000 in a foreclosure, or somebody needs to get out of it, like whatever the situation is, now you bought a house at 50% off. That's what we did with the Flexport shares.
Wow, okay, that's interesting. So there's the same strategy for that one too. So why would they dilute it like to half?
Well, let's say you're an early VC fund, you got into that thing at 12 cents or, early round, and the thing's at $14, selling it at $7, but you need liquidity for some other opportunity. You've got a multi-1,000% win. That's the dynamic you're looking for to arbitrage those shares. So they needed liquidity. We can close in 30 days. That's worth a discount. Then it makes the deal work.
Gotcha. And that's how you come in and target that part and bring in the retail through your fund or funds for that.
So that would be what the bigger firm is negotiating on those shares, right? They might be grabbing $50 million of shares, and then they go to smaller fund partners like us and say, hey, you get 5 million, you get 3, you get whatever, so that they can, kind of crowdfund from funds, roll up into their fund and make a big investment in a, very quick amount of time.
Okay. And this is not the Innovation X one. It's a different company.
That's Innovation X. Yeah.
That's Innovation X.
Yeah.
As well.
So they were on the cap table privately of Palantir, Spotify, Airbnb, Lyft. All the best, Uber, all those IPOs of the last 10 years, they were in all of them. So
okay.
Now we have access to go through fund to fund with them and do the same thing.
Gotcha. So they finish all that they're raising from those top tier companies first, and then the rest of it comes down to the fund of funds. That's where you come in to bring other investors through your fund to be able to invest in that.
Yeah, you got to move fast. That's one thing I've learned is, if you're having a hard time raising money, you probably don't have a good deal, because money finds good deals. I'll give you another example. We just did, we needed $6 million for our company, Healthcare Integrated Technologies. It's publicly traded under the ticker HITC. Company's got no debt. We didn't really need to raise the money, but we're uplisting to the New York Stock Exchange this year. So you got to check all these boxes. You got to have a certain number of shareholders. You got to have a couple years of burn rate on the balance sheet. So that's why we raised the capital, is just to put that cash on the balance sheet so that we can uplist. And the way this is very different than private placement, which is what we're talking about. This is a public company that we're raising private capital for. Okay. And you can do it at the volume weighted average price, which is resets every 30 days. So going into January, the stock volume weighted average price was 12 cents, and through news and some things that happened at the company, the stock shot up to 40 cents. We were still raising private capital at 12 cents with the market price at 40. that's almost a 400% discount to the public stock price.
Right.
We had so much capital flood in. We raised 11 million. We only needed 6, right? And it took 3 weeks. So again, when you have a great deal, a great arbitrage, a great opportunity, money will find it.
Wow. Okay. And you've used the word arbitrage for a few times. So can you like educate on like what do you mean by in terms for arbitrage in that sense?
Yeah, arbitrage is like a spread.
Okay.
Keeping a spread. I'll give you another example. Have a friend. He's got a bridge lending company, right? So he gives bridge loans to multifamily investors, developers, anybody in real estate that needs short-term capital as a bridge. He's raised $750 million into a fund, and I believe it's a debt fund structure, but he pays his investors 8%, right? He lends the money out on bridge loans at 12%.
Mm-hmm.
So his arbitrage is 4% on that capital that he keeps every year.
Gotcha. Okay.
So what's 4% of 750 million?
A lot.
It's a lot of money.
Yeah.
Yeah.
Okay, so that's what you mean by arbitrage, by using other people's money in that fund, but you invest it out higher, so that you get the percentage that way. Okay, that's fair.
You're creating a spread is
Okay.
what arbitrage is.
And that's where you guys also are doing it that way to be able to get your profits and all your investments and be able to help investors come in and they get the percentage because they won't be able to get it from any other platforms or any other vehicles. So how was your first deal after when you first started raising capital? Well, how was that experience like in that first ever deal that you did to raise capital?
It was great. I mean, it's like anything when you first start doing it. You have no idea if it's going to work. You have no idea how to do it. You just get started and you just go. So I think what it was mentally is just, I was used to selling a $5,000 to $10,000 ticket, in people's homes, door to door. And eventually it just gets really boring and mundane. And I was looking for a bigger, high stakes game, right? So now it's higher level conversations, it's higher level people, and the minimum's $100,000. So instead of driving to somebody's house and spending 3 hours in their kitchen, making a sale, let's say at $7,500, and I'd make like, I don't know, $800 off that, and it would take, half the day. Now I can get on a 15, 30-minute Zoom meeting with a prospect, show them the suite of deals. If they want to put it in, 100K or more. I mean, I'll never forget the first time I got on a Zoom meeting for 30 minutes and somebody wrote me $1 million check. It was like, wow. In my last sales vehicle, it would take me 6 months to do $1 million in sales, and I just did it in 30 minutes. So, it was
amazing,
very enlightening. And then, there's levels, right? And then there's people who look at that and say, oh yeah, but like, I did 100 million on a call. It's like, there's no end to this. So I think it's just challenging yourself and feeling worthy of the vehicle. Cause that imposter syndrome of, do I belong at this next level? I think we all feel that when we're hitting a ceiling and moving into a new thing.
Yeah, agreed. Yeah, I see how to say it. I mean, and were you still going door to door while you were trying to raise that first?
Yeah.
Okay.
Yeah, I was running sales teams. So when we exited that business, I knew it was coming. I was actively on top of my, let's say, 9 to 5 work.
Yeah.
Even though I've never really had a 9 to 5, 100%
right.
commission forever. But on top of that, I was starting a couple businesses trying to figure out what I wanted to do next. I started a health coaching company.
Okay.
I mean, I was working, and this is what people aren't willing to do. Like, I had my regular job, let's say, running the sales organization and doing door-to-door sales on top of it. I was always the top closer on the team in terms of revenue, regardless of the team underneath me.
Mm-hmm.
There's a long story around that, but yeah, I mean, when I would finish that, I would work till I would just get exhausted until midnight, trying to figure out what the next thing was going to be, because I knew that chapter was coming to an end. And eventually, I found the partners that we went into the fund space together, and I shut down that health coaching company.
Gotcha. Okay.
So you just got to be willing to just keep trying stuff until you figure out, what's going to work, and just work on it around the clock,
Okay. That's amazing.
I don't care if it's Saturday or Sunday. Like, what do you mean? You need the concept of a weekend means that you think you deserve a vacation every week.
Wow. Okay. That's profound. Yeah. Profound. So you were still doing door to door, and after that, whenever you have time, you're working on your other businesses. And were you also working on the marketing side of things at that time to build up your brand?
Yep.
So you're working on all those things at the same time. And then how were you able to find the partners that were able to start the fund together?
Yeah, I was going from event to event, getting into rooms where people, cost money to be there,
Mm-hmm.
and that's how it happens, right? So you got to invest in relationships. There's no better investment than the next partner or the next room, the next event. I mean, everything that I've been able to do has been because I put myself into rooms where I could meet the people that had already done the thing or could complement my skill set because they were great at the things that I'm not great at.
Gotcha. Okay. And for these events, like I know people as well in the space where they pay the money to be able to get other people not go in there because you can come in and meet the people that are willing to pay. So you um kind of like segregate out, to meet the higher level people that you can grow up to that. And was that the mentality that you have to be able to go to these events to meet?
Yeah, and it's not cheap, right? It's, you buy the VIP ticket because that gets you into the VIP dinner and you sit in the front row with all the other VIPs,
Mm-hmm.
right? So the more you're willing to invest in the event, the more proximity you're going to have to the higher level people that you want to be around. So
That's amazing.
that's literally how everything I think at a high level is done. It's always a person, it's always a relationship.
And was that like the primary focus of you at that time to try to transition to go and spend money to go to these events to meet all these people, these high level people?
Yeah, and then what can we do together? Do you have other events? Can I speak, right? Can I get on the stage? I knew I had to get out of my comfort zone and start doing things in terms of marketing that positioned me as an authority in my space. So that's, even if it's just doing a podcast and then it goes out onto social media and then it's collaborated and then there's the long form, there's the shorts, there's all this exposure, and that's how you find your inbound DM that turns into $1 million raise. That's exactly how it happened for me.
And that's the first deal that you were working on? Was that the one? And going back to you mentioned the Zoom that you did, the first Zoom that you did that you were able to raise that 1 million. Was it like a one to many or was it like a one-to-one Zoom?
I was just one to one.
One-to-one Zoom. Wow. Okay.
Yeah, but I was ripping Zooms all day long, right? So, different industries, you got different closing percentages. I would say I'd probably have to do 15 Zoom meetings to get one investor. And I'm making that up. I don't know what the date is. It might be 20. Doesn't matter. Like, I don't care how many reps it is. I just know if I keep going and I don't stop and I just keep taking action, eventually you win. That's why I just never cared about closing percentage. I just cared about how many reps I'm getting in.
Gotcha. Okay. And is that the basic advice, the first thing you advise people to do, just take action and keep doing it and keep building the grit and the consistency to be able to get to that first yes that you can get?
Yeah, because everything's also a perishable skill. The more you do it, the better you will be at it. And you're never going to be good at it until you take a lot of reps to get good at it.
Correct. Okay.
It's not rocket science, but for whatever reason, people don't want to go through that painful period up front where you're taking tons of action and nothing's working, nothing's happening. Like, that's how you're going to figure out what does work. That's how you're going to eventually get the person who does want to do the thing, So
And was that skill set and mindset that you had, was it based on that 10 years you had going from door to door? You had to
no doubt.
build out. And were you going door to door here in Vegas, even in the summer heat?
No, so I'm not from Vegas. This was on the
Oh.
East Coast, right outside Washington, D.C.
Oh, okay, cool.
I
cool.
moved here 2 years ago.
Gotcha. Okay. So you did everything on the East Coast in Washington D.C. So like right now it's February in the middle of winter over there. So you were also going door to door, few feet of snow.
Yeah, I mean, I'd have clients, towards the second half of that career, I had gotten so many referrals and I'd done so much that I didn't have to, cold knock door to door.
Okay.
But it would be, there'd be days where there'd be like a dusting of snow or there's snow in the forecast. And then the client's like, hey, it's going to snow. Like, let's cancel. I'm like, I'm coming to your house.
Yeah.
Like, what are you talking about? I'm like, no, I'll be there. Right. It's like, the way people think and the way I think is just completely different. I mean, I don't care what you throw at me. I don't care if it's weather. Like, I've got a target. I've got a goal to hit today, and I'm not going to let some snow get in the way of that.
Okay.
It's
Yeah,
just,
that's amazing. Okay, so that you build that experience, that skill set, and the mindset, and that was helping you propel yourself. And was the first deal that you did raising those capital, was that a million? Was that the biggest one you did at that time for that deal, or do you have to
yeah.
raise more for that?
Yeah, there were, that was the biggest one wire transaction in that fund. But what happens a lot of times is you get an investor come in, they're getting great results. They want to start conservative, as I would recommend everybody should. Whatever that amount is for you, could be 100,000, could be 10 million, But then they add to their position, right? So over time, some of the investors are getting great results. They're adding more, or they're getting into our next deal. So yeah, when you prove results and you retain your clients, then that second money is always easier than the first.
Gotcha.
So
okay.
Like if anybody is getting started in this microwave mentality, I see people quit after 30 days, 60, 90 days. It's like you got to go back to zero in whatever new thing you're going to do. Like it's always hardest at the beginning. So if you can just sustain and get through it and you don't quit, it only gets easier every day.
Yeah. Okay. So basically just being consistent and always taking action no matter what, just as long as you have plenty of time, use that time that you have to be able to build your skill set and that.
Yeah.
And you mentioned something about microwave mentality. Can you elaborate more, because that's the first time I've heard about that?
Yeah, microwave mentality is literally almost everyone I deal with. I mean, it's unbelievable. They say, like, I'll give a perfect example. If you want to do a DM outreach strategy prospecting and you spend, let's say, $1,500 a month with us, a lot of people are going to say, at the end of the first month, if I don't get $1,500 back in revenue and break even on this investment, I'm canceling, right? It's like, I did it for 6 months before getting one transaction to work.
Okay.
Because in the beginning, I'm not looking for results. I'm looking for feedback.
Okay.
Right? I'm trying to figure out what works, not, hey, does it work in 30 days and then I'm out? Like that's what most people do. They quit before they even have enough feedback from the marketplace to figure out what's going to work.
Gotcha. I see what you're saying right now. So instead of going 30 days, like what do you think is a sweet spot that will stick to you to be consistent after that?
There's no answer for that. That's why it's so hard. You have to have the grit and determination. I mean, I think our first business is the perfect example of that. We spent a decade trying to make that business work, and we built it. We were doing 10 million in sales. That's great. But had we built, a business that private equity wanted to buy? No, right? So there was no exit in sight, and we just kept working on it. And then pandemic hits. Now all of a sudden, everybody's in the market for our food delivery service, and we get an exit. So what if I had quit at 1 year, 3 years, 5 years, 10? There's no silver bullet. But then on the other side of that, it's like, well, what if it would have never worked and I did it my whole life?
Yeah.
So that's a really tough dynamic, is figuring out when to call it quits, when to move on, being stubborn and sticking in it when you shouldn't. But then sometimes it works. So I don't know.
So you just have to find, it's kind of tough because you do not know, right? And it could be anything too. Like somebody in W2, you never know, like the company might just say, hey, we have to close everything down. Now you guys are.
There's risk in everything. Look at everybody who's losing their government job right now because of the Doge thing and crying the blues and blah, blah, blah. It's like, yeah, you went for a guaranteed safe thing that turned out to not be so safe. So I don't think there's any safe track.
Gotcha. Okay.
There's stability until there isn't.
Okay.
Yeah.
And I guess it also goes back to what you were saying too, right? That's why you need to build your ancillary skill sets and experience to be able to, if something happens, you have something to help you in that time frame to be able to offset what's happening in your other part of stuff.
If you can learn sales as a skill set and get very calculated with communication and relating to people, and just being able to talk to people and sell, you'll never have to worry about money. You could lose your job tomorrow. There's a million high ticket offers you can sell over Zoom and make 10, 20 grand a month, like right out of the gate. So it's empowering. Like your job or your company or whatever it is should not be the fallback. You are the fallback when you have the skills.
Wow, that's profound. So that's why you always want to help and always try to tell people to build that skill set, build that discipline and grit, like you said, to always be learning and building.
Yeah. Even if the business or the job you're building, even if it doesn't work in the end, stick with it long enough to build the grit, resilience, and the skill sets that will transfer into the thing when you do find what works.
So so basically, even though you have a job, but try to see what you can do within that job to be able to build something that will be transferable and be able to do something else as well. So that's pretty good. Yeah, thank you for that.
Yeah, and you'll grow, right? I remember in the beginning, I was doing door-to-door sales during the day, and then I was dealing cards in a casino overnight.
Okay.
Because I thought harder work was the answer at that point.
Gotcha. Okay. Right?
And it wasn't in the end, but you've got to go through that process to figure out, what is going to work. And then I realized that not sleeping wasn't going to work. And, what is back then, I think dealing cards in a casino, you could only really make like 50 grand a year doing that.
Okay.
So, but at the time it was like, I'm making 50 grand door to door. If I could add another 50 grand, I got just doubled my income. And all I got to do is work nights on top of the day,
Yeah.
So that was how it worked mentally in the beginning. And then it was like, okay, now how do I get more efficient? How do I get a better product where I get, more juice for the squeeze? And that's how you grow.
Gotcha. Okay, that's amazing. And then from there you were able to scale and grow and able to raise the money for that. And were there any trials and tribulations coming when trying to raise that? You raised that 1 million from the Zoom, but was there any other issues or problems that you came across?
Oh yeah, tons.
What was the one thing that was very profound that you learned from that and was able to bring that forward?
I've learned a lot of things in the last couple of years since getting out of the food business, probably more than my whole life combined. One of them is in investing, particularly. There's no amount of due diligence you can do that will get rid of risk. There's always risk. So you can, we had a situation with a fund where somebody stole a bunch of money from us, $12 million stolen, and that's how I got my PhD in litigation in the last 2 years. So we filed lawsuits against 6 individuals and entities that were involved. And last week, actually, we got a judgment on the principal owners of that brokerage that stole that money. And so now we are 6 for 6 litigating. We either won or settled with every single person and entity. So yeah, it's and in that process of due diligence, liquidity providers, SEC attorneys, like we ripped everything apart the most you could, and everything was perfect. No red flags, nothing. And even still, things can go wrong. Whenever humans are involved, I'm involved in some real estate stuff with a guy that's done over $1 billion in transactions, perfect record over 20 years, got into a squeeze with interest rates going up and construction loans, and he committed fraud. It happens. So yeah, but there are things you can do to protect. Like all of our funds have third-party reporting, which is really important if you're looking at investing in any private placement. I just wouldn't invest with anybody or any firm that doesn't have third-party reporting, because what that does is it prevents you from getting hurt in terms of bad actors from the GPs or the investment themselves, because any money movement goes through the third party. So let's say we raise a bunch of money and we wanted to steal it or something. We cannot move money out of that bank account. We're blocked unless the fund banking, the third-party administrator, and the general partner all sign off on the money moving, right? So what happened in that real estate fund that I was in couldn't happen in any of our funds. But I didn't know that yet because I hadn't been in the investment world. I'd only been investing as a limited partner. It wasn't even on my radar what third-party reporting was. So the first fund we launched and went through that process of putting in your legal counsel, your accounting, your auditing, and the third-party reporting, I learned that whole process, and now I'm much more educated on how to vet a fund. So that's a lot of what I do when I'm talking to investors. It's not even really about the deals, but I want to teach them, how to vet an operator. They can learn from my mistakes and not lose millions of dollars. Like if I can help somebody do that on the way, I think, whether they decide to invest with us or not, at least, I'm giving them a whole lot of value.
Gotcha. And when you mentioned third party, are you talking about like a third party administrator administering the fund?
It's a company, yeah.
Where they're just like a proxy.
And they run all the compliance.
Okay.
They send all the statements to the limited partners.
Okay.
So it's an extra veil, I guess you could say, of protection. Because if the GPs are the ones sending you the statements and the reports, maybe they're real, maybe I'm making them up.
Okay.
But if it comes from a company that all they do is compliance for you, that protects the investors, and it's a lot more transparency that you can trust.
Okay. And so the third-party administrator is the one also that's setting up the escrow account where the LP can wire the funds into the escrow account, and then the escrow account will be dispersed to the main fund. And
sort of. It would come into the fund bank account, right? When the money lands there, it would be for us to deploy it into an investment or whatever. That would have to be signed off on, from the third-party administrator before the money could move.
Gotcha.
The same way, if we were going to pay distributions to our investors,
Yeah.
the third-party administrator would audit all the the money moving and where it should go. They would look at the compliance of every private placement memorandum, identity verifications. Like they do everything compliance before any transactions take place.
Gotcha. And that was later on in your investing journey that you found out about something called a third-party administrator.
Yep, I found out about that when we were launching our fund.
Okay, but that was good that. So before that, you didn't have one.
No, I didn't have any funds, so I had just been investing in other people's funds.
Okay.
At that point, as I got introduced to the world by being a limited partner of other people's deals and funds.
Gotcha. Okay, so your journey was like you started as an LP for some other fund, but when you were doing that, you were actually using the third-party company of that fund to wire your funds into that fund account, and that's how you learn about that third-party company that manages.
Well, when I was investing in all these deals, I was sending my money directly into their bank accounts.
Oh wow, okay.
They didn't have third-party reporting.
Gotcha.
I didn't even know about it.
Wow, okay.
And then when we went and start to launch our funds, and you start to pull in consultants and attorneys, and you start to learn how to put this all together.
Yeah, okay.
That's when you learn about the third party, and I was like, wow, that's so powerful. You don't have to do it. You can do your own books if you want to. You can do your own compliance if you want to.
Or you can send out your own K1s and stuff.
Yeah, you could do that. But I think fundamentally, just knowing how much fraud and how brutal the private placement world is, I would like to remove that objection from the equation.
Understood. Yeah.
Yeah.
And you want to make your LPs also more comfortable. That says like, hey, we are not the one managing everything. All your money's going here. It stays there.
Yep.
Until it's being dispersed. We are not seeing. We don't even have access to the account or the bank account and stuff like that. So I like that because that's I came through that experience too. I kind of like went through a lot of bad stuff, and I was given the opportunity to able to start my own fund as well, a small fund. So, and that's why I learned about a third party administrator, and it was good to know all these things, and it's kind of like education as well for me. So thank you for sharing that because that's quite profound. That people go through that, and to learn that, right, you have to be consistent, and you have to go through all the risks and losing stuff to be able to know, okay, so this is something that I'm educated and able to know what to do in the future. So have you also connected people to deals that you were not able to fund? Like there's another fund that I say, well, maybe I have somebody else that won't go through my fund, but they can invest directly to them and just get like a referral or connector fee or something.
You gotta be careful with. There's ways to do it depending on what it is, but yeah, to be directly compensated off of capital raises, you just got to make sure you're structured correctly and make sure you're being compliant. Talk to your attorneys on how to properly do those things. And I think it's different in every state too. It's not it's not so simple. I mean, you can put agreements in place, fee for maybe it's doing some marketing to make something happen. There's ways to do it, but yeah, I mean, there's a lot of people that I'll connect because what you end up being in this business is you end up being a broker for everything.
Right.
Yeah. It's like I got these guys who they're some of the best private jet guys in the world. They sell 737s and 757s to airlines, and they also sell Gulfstreams and Hawkers and whatever Cessnas to private individuals. So anytime I have a high net worth person that's either looking to buy or sell a jet, I just connect them with them.
Mm-hmm.
The jet gets sold, maybe I get a 6-figure check just for making a connection. So there's opportunity everywhere. And if you make your life about building relationships and just connecting people, a lot of crazy things can happen. I had a guy hit me up. He's like, yeah, I need to do a 1031 exchange from this multifamily to another one. I was like, oh, how much is it? He's like $60 million. You need to 1031 $60 million. And I'm like, all right, well, that's a big deal. Like I got to, because 1031's got to go into a property of a higher value. So yeah, I just started making phone calls to bigger operators, people with, $1 billion plus funds, and connected them, and something gets done.
Yeah.
Maybe there's a little slice,
Exactly, yeah.
And if not, like you want to be known for the guy who can make things happen. It always comes back. Like I won't even try to get something out of the deal. If there's something for me, great. But if I can make something happen for 2 people in my network, I'm going to do it every time.
Right, because they will remember you.
Yeah.
Even if it happens or not, at least you build that connection, right? It's like, I think like what Jackson always says, he always like a degree separation from someone that will be your biggest investor, your biggest client, your biggest. So yeah, and I like that ideas too. So that's one of the things that I see as well when going to meet all these people. You get to see what they're doing and try to connect as well. So and that's kind of like one of the good education, like, and that's why I'm doing all this right now. So thank you very much again, Justin, for your time today. How can people bring value to you, and how people can reach you in try to maybe invest in you, or what are you looking for right now in terms of your business, raising capital?
Yeah. We got lots of deals. This year is going to be heavy on real estate. We're going to be buying hotels that are operated by Marriott. We're looking at a $1 billion development deal in Chattanooga right now. So my partner, Scott Boroff, 22 exits. He's rang the bell on Wall Street. He's managing our deal flow, and we're going to raise $100 million for deals. So if you're an accredited investor, definitely reach out. I can talk to you about all the different deals we have. And if you're not accredited, just go buy the stock, HITC. That's the ticker symbol. We're uplisting that thing to the New York Stock Exchange this year. I expect big things out of that company, but check it out. Since it's publicly traded, I can't really talk too much about what's going on behind the scenes.
That's
but do some research, and even if you just buy a little piece, a couple $100, whatever, you'll be very happy you bought HITC.
Okay. And how do people reach you?
Social media is the best way to reach me. Instagram, LinkedIn, Facebook. I'm on all of them. And there's only one of me in the world with a last name like Freishtat. So it's at Justin Freishtat.
Awesome. Well, thank you so much again, Justin. I appreciate your
thanks
time.
for having me.
Thank you so much.